Hey everyone, this week's episode is brought to you by Coinbase Prime, Ledger, and OurCrowd. Really love these companies, proud to call them sponsors. You're going to be hearing more about them later, but for now, on with the show.
I think that in order for Bitcoin to get to 100K, we needed institutional money. We need that type of subscription by these other entities that say, look, Bitcoin is a legitimate asset class. This market cycle, the asset class as a whole should reach approximately 10 trillion.
All right, what's going on, everyone? Welcome to another episode of On the Margin. Today, I'm joined by Mr. Benjamin Cowen, also known as Into the Cryptoverse. What's going on, Ben?
Not too much. Thanks for having me on. Pleasure to be here.
We've got a lot of ground to cover today. You actually put together a great deck. So I actually want to kind of segment this conversation, actually walk through some of the charts that you put together for this presentation. And then I'm a curious guy, so I've got like a bunch of just questions to ask you about different narratives and stuff that we're seeing. Let me switch over here and start with some of these charts. Title that we've got here is Crypto Market Cap and Trend Line. So why don't you just describe what's going on in this chart?
Yeah, I mean, so this chart basically is just it's the entire cryptocurrency asset class, not just Bitcoin. It looks like Bitcoin, right? But it's actually the market capitalization of the entire asset class. Like if you look on the left, we're currently, at 2.5 trillion, somewhere in that area for the entire asset class. And the whole idea is that, you're going to see some type of like diminishing returns over the long haul. And one way to, encapsulate that trend is using logarithmic regression, where the most insane moves happen early on. Doesn't mean you can't have great moves later. It just means they're going to be slightly diminished in terms of their ROI, and that's sort of what these logarithmic regression trend line more or less encapsulates. And the whole idea is that, look, I mean, we're going to go through periods of overvaluation and undervaluation. We're going to have bull markets and bear markets. And the whole idea is to figure out, well, how far overvalued can we get before we ultimately come back down to earth? And, when I look at this chart, what I think of is I think it looks like we have a long way to go. You can see that if we were to go to the the higher green line, which we've hit 3 times in the past, we should be able to go several trillion higher than we currently are today. And I generally think that this market cycle, the asset class as a whole, should reach approximately 10 trillion, plus or minus a few trillion. I've often said 7 to 13 trillion is generally where I think it's headed. But you should note that there's not really a good chance we're going to hit 10 trillion this year, right? It would we'd have to just go straight up. Right. Which is probably not going to happen going into the next, the final 30 days of the year. So that's generally the idea of this chart. You have the fair value logarithmic regression trend line, and then you have sort of the bear markets where we're below the line, the mania phases, the bull markets when we're above the line, and then sometimes we sort of just track the fair value for a while.
Yeah. And Ben, just from my own nerdy curiosity here, when you're looking at this red line here, that's the fair value. How do you arrive at that red line? How do you determine what the fair value is?
So in this one, it's sort of an interesting thing. Like this one, I'm basically minimizing the summations of the logarithmic difference between the fair value and the actual market capitalization. So it's an iterative process. It's somewhat complicated to solve, but I basically just resolve it every month, and then this is what you get.
Very interesting. So another pretty famous chart that a lot of folks refer to in this space is PlanB's stock to flow ratio. So that's specifically looking at Bitcoin. Stock to flow is a concept that I'm pretty sure he borrowed from commodities, but still relatively applies. Are those, I guess these charts look relatively similar, but there are some key differences. So would you, if you were trying to look at just where we are in the cycle, whether or not assets are priced fairly or not, how would you kind of use those two charts in tandem with one another? Are they related here? Are they different sorts of concepts? How do you match those two ideas up?
I think it's actually pretty similar. Yeah. And the stock to flow, that stuff goes back to, goes back decades, right? Well before Bitcoin. But yeah, I think that they can actually be in agreement, generally speaking. The stock to flow model is basically predicting average prices for Bitcoin. It's not looking at market cycle peaks or anything like that. It's looking at just what the average price of Bitcoin should be during like a 4-year window between one halving and another. I know that his current model, the stock to flow model, has the average price for Bitcoin to be $100,000 for this market cycle. Clearly, clearly, my thesis on these cycles are that the cycles lengthen, right? I don't think we have to have a market cycle peak in 2021. But I mean, even when you think about like the stock to flow model, if we have any hopes of having an average price for Bitcoin of 100,000 between the last halving and this halving, we have to go well past 2021 in terms of putting in higher prices, because if we just put in a market cycle peak in 2021, unless we just shoot up to $300,000 in the next 30 days, it's going to be mathematically impossible for us to have an average price of Bitcoin of $100,000 without having a lengthened cycle. So, I think that you can sort of see how they could ultimately both end up being true. But I think that he's sort of given some guidance on basically saying that, for the stock to flow model to really pan out, it has to be at least $100,000 by Christmas.
Right.
Yeah, I don't really necessarily think that it has to be at 100K. And I mean, if we were to sit down and do the math, you could clearly come up with a solution that would put the average price of Bitcoin at 100K between, say, 2020 and 2024, even if it's not at 100K by Christmas, right? I mean, it's still mathematically possible. If it goes to 150K, 200K, and then sits there for a while, it's certainly possible. Now, personally, though, I would say that an average price of 100K for these 4 years is probably a little bit on the high side, considering we've spent the last, since May of 2020, we've spent all this time well below $100,000. So I don't even know what the average price is for the last 18 months or whatever, but maybe somewhere between $30,000, $40,000 or something.
Yeah.
I mean, it's just going to be a lot of work for us to get to an average price of 100K. Not saying it's not possible, but you can sort of see how both models could ultimately pan out to both being true this cycle if we in fact have a lengthened cycle, which is what I think. And then ultimately the average price, maybe not getting quite to 100K, but it could get a lot closer than it currently is.
Yeah, absolutely. And just, one other sort of technical question on this chart. These yellow lines that we're seeing here in between the regression band, is that just basically the idea that valuation kind of fluctuates within the band? Or is this like sort of a prediction? Like it looks like, if I were just look at the band here, looks like you actually have us topping out purely in terms of valuation, I guess, in looks like around January of 2023. Is that more of like a guideline type thing, or is that more a prediction thing?
It's more or less a guideline of thinking about lengthening cycles and diminishing returns, right? I mean, you look at each cycle, you can see the first one happened relatively quickly. The second one took place over approximately 2.5 years. The third one took place over approximately 4 years. So then I was sort of just speculating that, all right, well, look, this one's probably going to continue going on for a while, and there's no reason that we have to end this month or I mean, there's been all sorts of predictions, right? Everyone's got their own prediction, whether they thought April was the peak, whether they thought September was the peak, October, November, December. There's going to be people saying January is the peak. Look, the way I look at it is I think we're going to keep going for a while. And the point is to say, I don't know exactly when we're going to get to that higher overvaluation, that upper trend line. I don't know exactly when it's going to happen. The point is that when it does happen, the risk at the time is going to be relatively high in terms of coming into the market at that point. And I think once we get to those valuations, we probably will have a phase where we have to come down to a while. But I would argue that the prices that we likely come back down to are probably somewhere around where we currently are for assets like Bitcoin and Ethereum.
Yeah, absolutely. One thing that I heard you say that really resonated with me as well is that you expect some more time in the current cycle, but you would actually be nervous, if you saw Bitcoin shoot up to 150K or something by December. Walk me through why that is.
Yeah, I mean, if you think about it, a lot of these price movements, all about whether it's sustainable or not. Like, is a trend sustainable if we go up to 150K next month? I don't think so. Like, I think there's just going to be too much selling pressure, including from myself, to be completely honest. I mean, like I say, like I'm a Bitcoin bull, but I have a couple panda bears next to me to keep me in check. I'm not gonna sit here and say it's going to go up forever, because I don't think it will. But it will generally trend up with time. We will have bearish phases, but we're still going to likely continue higher. And I ultimately do think Bitcoin will hit $1 million. It's not going to do it this cycle, though. And so, I think that, look, I think that if it goes up that quickly, right, if it goes to 150K in, say, the next 30 days, we're basically going to be looking at an extension from the 20-week moving average of over 100%. That's basically where we were at the local top in April and May. where we were so far extended. Anytime we get that far extended, we have to go down for a while. We typically, if history is any indication, it's not something I like, right? I don't really necessarily like that that's the case. But it was back in April. I said, look, guys, we're too far extended. We need to go down for a little while. 3 to 6 months is probably what it's going to take. And if that's the problem with getting too far extended. So if we get too far extended too quickly, then what's going to happen is the selling pressure is just not going to be offset by any type of new demand, and we have to go down for a while. But if it's just a slower move up, right? I mean, like, think about the last 6 months. I mean, it's been, or the last 5 months or so. It's been a relatively slow move up. I mean, not that slow. I mean, maybe slow for crypto, but, 29K and then to 53K and then back down to 39K and then up to 69K and then back down to 53K. It's just sort of this slow process of higher lows and higher highs. We're not going parabolic, right? It's just an uptrend. We're not parabolic yet. If we go to 150K next month, then at that point I would say, look, guys, it's too risky. This can't be sustained in the short term. I temporarily become the bad guy because no one wants to hear it, right? But then historically we do end up coming back down, and then eventually we'll work our way back up and then take out that one as well.
Yeah, absolutely. Something that I've heard you talk about a lot, and I really agree with it as well, is this idea of kind of lengthening cycles in general. So we're looking at a graph or a chart here of ROI versus the days from the bottom, I guess, of various cycles. And you got cycle 1, cycle 2, cycle 3, and cycle 4. If you're an avid listener of On the Margin, this is going to be the third time that you're looking at this chart. Sorry, Ben, I jacked it from you. It was that good. You did get credit. But walk me through kind of what the thought process was for creating this chart and what your thoughts are just about cycles in general in our space.
Yeah, so I think Bitcoin, it goes to these sort of market cycles where every cycle we speculate on something a little bit different. In 2011, it was this new novel this novel concept, of Bitcoin, and obviously through the years it became the idea that, all right, it's going to be the future peer-to-peer currency. And then in 2017, we were like, all right, maybe it's just a store of value, and then people were also speculating on the ICO craze for Ethereum and whatnot. But even then, every cycle, there's more to speculate on than the last cycle, right? I mean, like 2 cycles ago, we didn't even have Ethereum. Ethereum
Right.
wasn't even around until 2015. So the 2013 cycle, relatively short. The next cycle, it took a while. I mean, it took longer. There's a lot more people coming into the space. There was more to speculate on. Now, 99% of those ICOs ended up being scams, right? And I think that, the people realized this, and then we could no longer support the crazy valuations back then. We had to go down for a while. We had to have a bear market. But today, it's different. I mean, it's not different in the sense that this time is different, right? It's just, it's more of the same. There's more to speculate on this cycle, right? You don't just have worthless ICOs. You have DeFi. DeFi is a huge space. You have NFTs. You have artists, these famous artists that are getting their own fans into the space because they're launching their own NFTs. You have tons of institutional demand for the first time. I mean, Tesla bought $1.5 billion worth of Bitcoin. MicroStrategy they announced they bought some today. Or at least, I don't know if they bought it today or not, but they bought it sometime recently and they announced it on Twitter today. So, every cycle, you have more and more to speculate on, right? And you have more people. And it seems like, okay, the cycle is going to keep going on longer. But we also recognize, too, that doesn't mean that you're going to outperform the last cycle, because we do unfortunately see diminishing returns, and that it takes exponentially more volume to continue moving the market cap another 10x, right? Like, we can't, and that's why people love betting on micro caps occasionally, because they can much. It's a lot easier for a micro cap to go up 10x than it is for Bitcoin to go up 10x. So the reason I came up with this chart was to basically say, you know what, guys, look, the data suggests the cycles lengthen as you measure them from market cycle bottom. Now, technically, I should say, as measured from this chart, we have not had a lengthened cycle yet. If you look at the purple line, we've gone out further than cycle 3, but the all-time high at 69K actually occurred within about 1 or 2 days of the last cycle. So now you have all these people speculating, well, is the cycle over, right? Is 69K the top? I would argue that's not. I don't think 69K is the market cycle top. I think we have a ways to go. I think if you look at the chart, you would expect lengthening cycles to play out and diminishing returns. In fact, right? You can see diminishing returns and lengthening cycles are just the name of the game.
You might say that we've unofficially lengthened the cycle.
That's what I would say. I would say it's only official once we put in a new all-time high. That's when we can say, all right, looks like the cycle's going to lengthen. I don't even think we've really, I think we're going to have another leg to the cycle. until then, I don't even think we've started it yet. I mean, Bitcoin still is. I mean, it's been a relatively boring year if you think about it for Bitcoin.
Yeah.
Not for Ethereum, not for a lot of altcoins. For Bitcoin, it's been relatively boring so far. We started the year on 28, 29K. Right now, we're only up 2x from that, right? I mean, Ethereum started the year at $700 or so, and now it's over $4,000. So it's been a relatively uneventful year for Bitcoin. I'm hoping there's more in store as we head into the end of this year and 2022.
Yeah. So we had Avi Fellman, who's a portfolio manager at Block Tower, on the podcast last week. And he kind of made the case for this being the last of these classic crypto cycles that we might be in. He was kind of looking at this exact same chart and saying he objects to the idea of having cycles at all. And one idea that's gaining some traction is that, while obviously there are going to be bear markets moving forward, maybe what we have is something that looks like a sector-specific bear markets, right? So in the past, there's really only been Bitcoin, I would argue. Like, I think everything in the space is still pretty much indexed to some degree to the price of Bitcoin, but previously it really was like everything was very much indexed to the price of Bitcoin. Now you could make the argument that while we don't have a huge diversity in terms of sectors, we definitely do have different sectors, right? We've got Bitcoin, we've got ETH, which seem very correlated, like maybe a high beta Bitcoin, but it still does perform differently. Every now and again, we have NFTs, we have DeFi, we have this emerging area of gaming. So I'm curious to get one narrative goes, well, maybe we never see a full crypto, 80% bear market again. And what we really get is kind of staggered bear markets in these different sectors. Do you have an opinion on that?
I think it's certainly possible. I mean, I think, NFTs are a completely different game to some degree. They've already had a couple of shorter, bursts and then bear cycles, and they're kind of going on their own discovery mode. But again, yeah, at some point, everything is somewhat tied to Bitcoin. And if you think back to May, when Bitcoin was dropping, it was, most of the asset class was sort of experiencing a pullback. If you go to the next chart, actually, it might actually help explain what I'm trying to say here. Yeah, that chart. So that chart is the same chart that you just showed, but it's on a linear scale. And one of the issues I think, one of the issues with market cycles are that they're somewhat ambiguous as to when they start, right? And you could argue that some people say that 2013 is really 2 cycles, right, rather than a double peak cycle. But here's my thinking on it. I think that over time, the crypto space, at least for Bitcoin specifically, the cycles will become harder and harder to discern from one another. But I think it's probably because, if you keep thinking about it, like, if the cycle theoretically, like if the cycles technically lengthen, and the first one was like a year or less than a year, the second one was 2.5 years, the third one was 4 years. If this one ends up being 5 years or something, I don't know, right? But whatever it ends up being, you have to think that, well, if the next one is, 6 years or something, at some point it becomes somewhat irrelevant, right? It's just like, okay, well,
right.
We expect the market to generally trend up for the next decade, right? Are we going to call that an entire cycle or what? But if you look at this chart, what you notice is that everything we've experienced for Bitcoin, this market cycle, is that little purple line that's on the linear scale is barely off the x-axis compared to the other market cycles. So what I think is that, look, eventually the returns are going to be diminished to the extent that, look, I mean, it's going to become a little bit more, it's going to become more and more ambiguous every single cycle as to, where it starts, where it stops. And it's going to just become ultimately like traditional markets, right? And we're seeing Bitcoin become more introduced or integrated into traditional markets, right? We have futures ETFs. Eventually, we'll likely have spot ETFs, that's just the way it's going to more than likely happen. Is you're just going to see these diminishing returns. I would argue, or I would say that there's no need that Bitcoin has to go down 80% again. One of the nice things, theoretically speaking, about diminishing returns is that, hey, if we don't go up as high, then maybe we don't have to drop as bad, So, right. I certainly think that we're going to have 60 and 70% drops. We just had a 55% drop this year, so we know it's possible. But do we have to go down 85% again? I don't think it's necessary that we go down 85% again. But we could certainly see 60% drops and 70% drops. To go to 85, 90% would be pretty brutal, I think, for Bitcoin at this phase. I don't see 90% drops by Bitcoin, not at anytime soon.
Howdy, everyone. This episode is brought to you by Coinbase Prime, the leading prime brokerage solution for all things digital assets, providing secure custody, trading, and financing to an institutional suite of clients. On the retail side of things, I am more than happy to make this endorsement because I have been a customer of Coinbase since the day that I got into crypto. I still keep the vast majority of my assets there, actually, and I do it for one reason and one reason alone, so that I can sleep easy at night knowing that my funds are safe. It's the same reason when family or friends ask me, where should I buy my first Bitcoin? I direct them to Coinbase. And now, finally, when institutions are starting to ask, what's the most safe infrastructure to use? I only point them in one direction, to Coinbase Prime. And the reason that I do that is because it is peace of mind. When it comes to security, everything is top of the line on this platform, and it's a white glove experience to boot. They've been securing client assets at scale for 8 years, which as of Q2 of this year is $180 billion. They have an industry-leading insurance policy, and they're audited by blue chip auditors so that you can sleep easy at night too. So, stop listening to me, click the link at the bottom of this episode, and go check them out for yourself. And when you get there, tell them that I sent you because I love to get credit. One thing that folks say as well, especially when you look at an asset like Bitcoin, right? You kind of talked about one of the reasons why you saw this insane ROI for earlier cycles is that it's just a much smaller asset class, much less liquidity. So each incremental dollar that came into the space moved, the market cap that much higher. And, Bitcoin is much, much larger than it was back in 2011, 2013, 2017. All right. So there's this kind of argument that what you need right now is actually institutions to kind of come in, and that we need that much capital to kind of move Bitcoin up in a significant way. And that the other side of that narrative is that, well, institutions aren't like retail. They don't panic. They have targets. They'll buy dips more aggressively. They'll hold for longer periods of time. So I guess in a way, that's might be like the fundamental change in buyer also supports what you're kind of seeing, everything that you just sort of described, right? In terms of, diminished returns over time, but hopefully less downside volatility as well. Do you subscribe to that narrative that when you have a very different, more institutionally focused buyer, that also translates to differences in price action?
I think that in order for Bitcoin to get to 100K, we needed institutional money. We need that type of, subscription by these other entities that say, look, Bitcoin is a legitimate asset class. If it's just retail, I don't know. I mean, I'm not saying it could never get to 100 grand if it's just retail, but it would certainly take a lot longer than if you have, these major entities just buying billions of dollars worth of Bitcoin OTC.
I would argue that diminishing returns is actually quite healthy at the end of the day, because everyone likes to look at these charts and say, oh my God, 700 times, a 700x, right? Or whatever return on investment. I'm just going to say, volatility is unpleasant. Actually, it doesn't suit most people. I don't really think that this space is ever going to get the global adoption that we all want, at even the current rate of volatility, right? So I think you need to surrender some of that upside for a longer, slower, but more consistent upward grind if you want people to participate in this space in a long way, and maybe that doesn't mean you get your 1000x's, but overall, I think I would argue that it's the natural evolution of this space, not just for fundamental reasons and kind of markets generated reasons, but it just kind of has to happen that way if we want it to be successful overall. Because stomaching volatility kind of sucks for the vast majority of people.
Yeah, I mean, look at cycle one. I mean, everyone looks at the left side of it when it goes up, but if you were living on the right side of it as it went down, it certainly wasn't much fun.
It was not, man. It was absolutely not. I've got, so this is actually, this looks like something pretty similar here. So you're charting out days since the halving. Walk me through why is this more useful, or maybe a different way of looking at things, measuring from the halving as opposed to from the bottom of the previous cycle?
So I always prefer measuring it from the market cycle bottom. One reason I don't like measuring it from the halving is because it's somewhat an arbitrary. I mean, it's not entirely arbitrary, right? I mean, the halving does have an important role in Bitcoin, right? We know that it does when the miner rewards are cut in half. But one issue is that, if you measure the ROI from that point, well, Bitcoin pumped 2 or 3x right before the halving. So then if you normalize it from the halving, then it's you're already kind of missing out on what it did just a few months before We normalized it to here. But I think that the reason why people like to follow it is because it's a big event for Bitcoin. And historically speaking, we see Bitcoin do well after the halving. I mean, it doesn't always do immediately well. Cycle 1 basically just went straight up after the halving. Cycle 2, it actually went down first. We went down for about 100 days, and it was like 3 months where we were going down. And I remember back then too that a lot of people were thinking like, what's going on? Like, why are we not going up? And I mean, I think at that phase too, it was somewhat, the whole idea of cycles was a little bit, the discussions weren't as I would say evolved as they are today. Because at that point, we had gone to like $1,300. We crashed back down to like $150 or something. It's after the halving. It's 3 months after the halving. We're still not doing anything. It's like, what's going on? Then the third cycle, we ended up taking off eventually. And then, of course, the third cycle took off as well. I mean, you can see we sort of hugged the halving, or hugged the ROI that we started with at the halving for a little while, and then we ultimately started trending higher. I think people just like to measure it from the halving because it's just this big event in crypto. And if history is any indication, then the market tends to do quite well following the halving. So I think that's the reason why people like to follow it.
Yeah. Well, if I were to present maybe the steelman argument for why people use the halving as this kind of anchoring, it's just because the halving obviously cuts in half the supply of new Bitcoin that's being issued. So generally, when there's like a supply shock, right, there's the whole stock to flow, supply and demand pricing version of things. Then that tends to spike Bitcoin, and then because everything is kind of indexed to Bitcoin, then it tends to kind of send everything off. I think one thing, and I know you're a proponent for cycles looking different, and this is something people love to say, it's different this time, 4 most dangerous words in finance.
Right.
But they do change. Look around, things do get different. And I think, we talked about sector diversification in general being different, but I think another pretty big change that might actually reduce the impact that the halving has, at least on market cycles, is stablecoins. The rise of stablecoins, because previously one of the most important value propositions of Bitcoin was liquidity, right? It was those were the highest liquidity pairs, Bitcoin versus ETH or Bitcoin versus everything else. Now, people kind of move into stables a lot of the time before they move into something like Bitcoin. So do you view, the introduction of stablecoins as potentially lessening the impact of the halving, or what are your kind of thoughts there?
I don't know that it necessarily lessens it. I mean, I think that I like stablecoins, to be completely honest, because it provides an easy off-ramp to crypto, for say like the more volatile asset like Bitcoin, Ethereum, or other altcoins, and then you can just quickly send them to some decentralized, or you can send them to your wallet and then go to some decentralized exchange, and you just start earning interest on your stablecoins while you figure out what you're gonna do. Are you gonna buy back in? What are you gonna do? I like stablecoins in that sense. But no, I don't think that they necessarily lessen the impact. I think that the impact is just lessened by a naturally evolving market where you're just going to have diminishing returns. I think that the biggest, obviously one of the things I've been thinking about recently is just the regulatory risk on stablecoins, which, that's a different topic, but that's something I hope they get worked out relatively soon, because, depending on what they say around stablecoins and whatnot there is going to significantly impact the market, I think. I think that the next bear market's probably going to revolve some around regulatory FUD. I think there's going to be a lot of regulatory FUD, but I don't really think stablecoins are necessarily going to lessen anything. I think that's just what happens in a maturing market.
Yeah, absolutely. So if you will, just speculate with me for a second here. Sure. What do you think? What's the most likely outcome for you? Do you think this next bear market kind of looks like? Because I think a lot of folks in this space are kind of scarred with this. It's like 80% drawdowns, and so I'm a class of 2017, right? So I only experienced the 2018, 2019 bear market, and that to me felt bleak, man. It was There was not much love. It was kind of like maybe Bitcoin's the only thing that really makes it. And I've actually heard people that have been around for longer say that bear market was nothing compared to 2014, 2015. So, if you had to, take a guess, maybe it's regulatory stuff that causes it, whatever it is, but what does this next bear market look like? How similar is it to previous ones that we've gone through? How might it be different?
I think it depends on how high we go. if Bitcoin sort of just slowly grinds up, there's no reason we have to go have an 80% drop, right? It's the
Right.
reason why we have those major drops is because we go up too quickly and retail FOMO's in. And like, I just want to tell people, just stop, right? Like, just stop. Like, you don't have to be the guy. You know, you have 10 years to buy Bitcoin below 100K. There's no reason why you need to be the first guy to buy it at 120K or something. Like, so I look at it and say, look, guys, like, the market is relatively healthy. I think the market's relatively healthy right now. If we go up too quickly, as we discussed earlier, then we're likely going to come back down. Now, I think that people are going to look to things like regulation. I think that's going to be the biggest thing. I mean, governments banning Bitcoin is something that it's pretty hard to actually enforce completely, you know? Banning things doesn't really necessarily do anything except make people want it more. But I think that I don't think the United States is going to ban Bitcoin or anything, but I do think there's going to be a lot of regulations, specifically around, you know, like other, maybe not Bitcoin so much, but like the DeFi space. You know, even NFTs. A lot of we just don't we don't have this regulatory clarity right now, and we don't even have a spot ETF for Bitcoin, right? I mean, so there's going to be a lot of regulation thought. I think it's what's going to sort of drive the next bear market. I do think we will have a bear market again. I don't think it will be as bad as say 2014, but I still think there's going to be a lot of drawdown, and that drawdown will happen if we have a major move to the upside. Right. That's the thing. Like, I mean, a lot of people like to chase cloud and say, okay, well, this is what's going to happen. It's going to go by to a certain price on this date. The problem is that most of those predictions end up not standing the test of time for the most part, right? Most people get things wrong. And really, I think the better way to do it is just a bunch of if-then statements, right? Like, if Bitcoin goes parabolic, then you have to be ready for the downside risk. It's basically what happened last November, December, January, February, March, and April. It's like, look, Bitcoin went parabolic. You have to be ready for the downside risk. So I'm sitting here thinking, all right, if Bitcoin goes parabolic, then whenever that does happen, I'm going to be, you know, looking to take some profits. But, you know, I think that right now, again, the market looks relatively healthy, but the drawdown will likely be if we go up too quickly where we can no longer sustain it. Because if you think about it, the next time we have a parabolic rally, not only are you going to have the people that bought at the bear market bottom wanting to sell, because there's a lot of people that bought Bitcoin like 4K, 5K, 6K, and they're just holding out for 100K or 150K, 200K, whatever. You're going to have these guys selling. You're also going to have the crypto class of 2021 probably selling too, that they're going to be happy to dump some of their... Yeah, because I mean, a lot of people came in, you know, in April. By the way, I would argue that the crypto class of 2021, they're lucky. You know, if they had come in 2017, they would have had to wait 3 years to see a new all-time high. If they bought the 64K top in April, they only had to wait like 6 months, which is not nearly as bad. So yeah, I mean, I think that you're going to have those guys selling. You're going to have the guys who bought at the market cycle bottom selling, and then there's just not going to be enough. There's just not going to be enough new people in the space to offset the selling from all the guys who got in at like 3K, 4K, and all the guys who got in at 50K, 60K. Eventually, the market just can no longer bear it if we go up too quickly. If it's a slow grind up, I'm happy to keep hitting. Let's keep, time's on our side, right? We're going to keep trending higher, but the minute it goes up too quickly, we're too far gone.
Ben, what are your thoughts kind of on-chain analytics? Because I see a lot of charts from guys like Dylan LeClaire or Will Clemente, and, they've got kind of these things about, like realized profits, stuff like that, the amount of long-term holders. I will say, I feel like every single tweet that I see is we're in an accumulation phase, or whales are buying. I don't really know how to interpret that. I mean, how useful do you think on-chain data is? You use it as one of a set of tools, or like, what do you think about it?
It shouldn't be the end-all be-all, right? Like, I think it's useful in terms of trying to figure out, like, what are people doing? Are you seeing whales accumulate? Who are you seeing selling? I mean, you have to consider too that if someone is buying, like, sometimes they'll say this amount of Bitcoin was just bought. Well, someone sold it, So you have to look at it,
right.
and they have a way of framing things, right? Like if someone is sending crypto off the exchange, they'll say, all right, someone just spent just sent 10,000 Bitcoins to cold storage. But if someone sends Bitcoin to an exchange, the narrative is different. Then they'll just say, oh, someone sent $100 million worth of Bitcoin for $1, right? Rather than saying, oh, they sent it to sell to you. So look, I think that it does have value, though. I don't want to minimize that. I think the problem is that a lot of people are just biased, right? A lot of people are biased, and they want to find a reason that it's going to do what they want it to do. Okay, because back in April, I don't remember any of these on-chain guys saying that it was going to go down, right? They were saying that they were saying that 50K was the floor, that we'd never go below 50K again, and that we were just going to keep trending higher. I also think it's true though. If you go back and look at April and May, there was a lot of Bitcoin being sent to exchanges on you can use on-chain data to show that there was a lot of inflows to exchanges rather than outflows, but they just weren't talking about it, right? They weren't talking about it back then. So I think part of it is you just have to have the conviction to be unbiased on it. So I think it's a useful tool. I do. I typically will, I'll check in on it about once a week or so, where I do kind of a deep dive to see what's going on. But should it be the only thing you use? No. And one of the reasons is because it can't capture everything, right? There's limitations to it. A lot of people just keep their crypto on exchanges. A lot of people do. And so you're not going to see any on-chain movements. It's just going to be like they might have a few $1 million worth of Bitcoin, or some of these institutions might have a few $100 million worth of Bitcoin somewhere that they could just sell in some custodial wallet or something. They might not have to, move it on-chain where people are going to see it. So there are limitations to it, and it also doesn't. It can never really capture all these crazy liquidation events, right? Where everyone's short or everyone's long, and then you just have this cascading liquidation event. So I think it's probably better to get an idea on long-term movements, not necessarily short-term movements. But even then, even traditional TA is kind of hit or miss on short-term movements. So I think it should be one tool in a set of a lot of tools that you should use.
Yeah. I'd love to get your perspective on, let's take one of those scenarios that you just outlined. Let's say Bitcoin really rips higher. One thing that I've noticed about Bitcoin in general is that people look at Bitcoin dominance, but my overall observation is when Bitcoin rips high, there's a rotation back from alts usually into Bitcoin, because Bitcoin has this history of just absolutely running away from people, right? There are these insane runs that are, I think, just burned into the psychology of folks that have been in this market for a little time. So it almost just completely sucks up all of the liquidity in the space. So let's say there was kind of a scenario where Bitcoin really does, let's game out some of these different scenarios that we see, right? So let's say scenario one, Bitcoin really runs away. How does the market kind of look in that scenario to you? Do you think it's we get, I don't know, maybe till Q1 or something like that, most of the liquidity moves to Bitcoin and then there's a big dump? Or how does that, one potential possible future look like for you?
Yeah, I think that we do know when Bitcoin rips, it leaves the rest of the market behind, more or less, right? Bitcoin dominance shoots up. I think for us to see, things like $10,000 ETH and whatnot, yeah, we have to have another Bitcoin move, right? We can't just sit here between 50K, 60K, 65K. We can't just sit here forever and expect these other cryptocurrencies to just keep trending higher without Bitcoin actually putting in new all-time highs. I think that in terms of timing, I think, I've said this since 2019 that I don't think we're going to have a peak in 2021. 2021 has just been really an accumulation year for Bitcoin, one could argue, between 30 and 60K for the most part. Could it peak in 2022, early 2022? Yeah, it's possible. I would argue that Q1 of 2022 is a lot more likely than Q4 of 2021. But I would also say, I would argue that Q2 is more likely than Q1. So I don't really see any reason that we have to go up immediately. I'm somewhat selfish. I don't want us to go up immediately. Mainly because it's just it's more fun in crypto to have a slow uptrend where people are generally happy, and than to have a year-long shakeout where everyone's just kind of depressed for a year, and you have to convince people this is actually the best time to buy, even though it doesn't really seem like it is. We will have that phase again, though. And the bear markets do have a way of kind of flushing out all the garbage too, which is good.
They do.
Yeah. So there are some good things about the bear markets for sure. And really, once you're in the bear market, once you've already experienced the 80% decline, it feels pretty good from then on out, because then you have this whole theoretical market cycle to look forward to, like we were looking forward to back in 2019. You said you were around for 2017, so you experienced 2018, you experienced 2019. You had the conviction to stick around, and because you thought the prices were going to go higher. So that was a pretty interesting time, in 2019 as we were coming into, the 2020s and expecting things to trend higher. Yeah, so I would basically say, look, whenever Bitcoin runs, it's probably going to suck up liquidity, as you said. It's probably going to outperform everything for, potentially for several months in a row, just like it did last time. It started running in October, November, December, January, February. It was basically just outperforming everything, for the most part. That'll probably happen again at some point. And after that, you'll see other things run, right? You'll see altcoins continue to rally, Ethereum will continue to rally, and a lot of these cryptocurrencies will be dragged up with Bitcoin as well. When Bitcoin's rallying, they just probably won't be able to keep pace with Bitcoin. Now, Ethereum might. I mean, Ethereum's been acting pretty strong relative to what I thought it was going to do at this phase, and I'm happy about that. I mean, but I do think that there's a phase coming. I've been saying this for a while, right? But there will be a phase, right? I think this cycle, because I think the cycle lengthens, right? I think the cycle lengthens where Bitcoin will leave the rest of the market behind. And if you think about it, the people who sort of bought Bitcoin for the first time in 2021, they don't really know what we're talking about. They keep hearing people say things like, well, when Bitcoin moves, it leaves everything else behind. I mean, they're like, well, what are you talking about? It's almost December, and Bitcoin's only at 2x from January 1st of 2021. So I don't think we're at that phase yet. But look, whenever Bitcoin makes the run to like 100K, 200K, somewhere in that ballpark, I do think it'll leave the rest of the market behind. But fortunately, you still typically have about a month after Bitcoin's peak where altcoins can still rally for a while before they have to come down to.
What's your thought process for why that is? Like, so basically, I feel the same way too, right? That as long as Bitcoin is kind of trading range bound or sideways or whatever, we're not going to see any real movement up in the rest of the market cap. Why do you think that is? I have a theory, but I'm curious to get your thoughts.
Yeah, I mean, I think for me, like Bitcoin is a much less risky asset. Like if you do modern portfolio theory and calculate out your risk-adjusted returns, Bitcoin is like the safest play. Like for the risk you're taking, the return you're getting is really good for the risk you're taking. Obviously, the returns on other assets can be better theoretically, but you're taking on a lot more risk, and survivalship bias is a thing where you only look back at the altcoins that went up 1,000x, not the 10,000 altcoins that didn't go up 1,000x that you could have also just as easily bought back then that didn't do anything.
That's way less fun, though.
Yeah.
That's way less fun. I get it.
Yeah. So I think part of the thing too is like a lot of people sort of ride Bitcoin and then eventually everyone's sort of like rich in Bitcoin and then they just don't think it can move much further. It becomes sort of this magic internet money to a lot of people, right? They have all this money. And it's sort of like not even a real thing for a lot of people, and then they just go blow it on altcoins. It's the altcoin casino is a nice way to say it. You could use a little bit more alliteration if I wanted to on that, but you could the altcoin casino, right? Where people basically just take their profits from Bitcoin, throw them into altcoins. I would argue that you should probably take some of your Bitcoin profits and then just stick them into stablecoins or something, and not risk everything you gain from the market cycle on Bitcoin on speculative alts. They may or may not do anything. But yeah, a lot of people just like to speculate, and it can, when you have all this money in the space, like everyone's portfolios are inflated like 3x, 4x, 5x in a relatively short period of time because Bitcoin just went up like a ton. Like you just throw even 50% of those gains at altcoins. Market caps are a lot lower, and then they can run for a while. So I think that's one of the main reasons is you just sort of have capital. One of the things too is you have a money ball, and you'll see this money ball float from like one layer one to another layer one. Like we saw it on Cardano in late 2020 when there was all this speculation. I mean, it's all been pure speculation, of course. But then it was recently on Solana. Solana did really well, $20 to $200 something in a relatively short period of time. Avalanche after that, right? I mean, like you just have this money ball going from one project to another. So like I have this theory right now. That most of these projects that are going up, it's basically just because we're moving money from one project to another. And we're not really, I don't think we actually have a ton of new retail. Like, I feel like most of the people buying Bitcoin now were probably also buying Bitcoin 3 months ago and 5 months ago. I think we really need that push above 100K before we're really going to see a ton of new retail people come in. And then that's just going to create more mania phases for a while. And then we're going to come back down. So I think it's like the shuffling of money from just, various projects back and forth to each other. And then also people being rich in their magic internet money and just kind of going crazy for a while.
I completely agree with you. I feel like what ends up driving mania bubbles in this space is some mix of like, it's almost like a mix of leverage slash money illusion, because I feel like what ends up happening is, Bitcoin and ETH go up and then everyone feels very rich and then they look for something to chuck money into. And in 2017, that was ICOs, right? So the Bitcoin and ETH goes up, right? Everyone feels wealthy. You denominate it in Bitcoin or ETH, and then you chuck it into ICOs. And then they had that forced selling dynamic in their treasury, right? EOS raised like $4 billion in Bitcoin. Then they have real world expenses. They got to sell all that shit. Right. And that's what, if you're looking for a reason, that's what kind of triggered the whole thing down. Now, my personal theory is that same dynamic is happening with NFTs. Bitcoin and ETH go up, mostly ETH. Then people say, oh yeah, this is only, you hear these anecdotes, right? Like, oh, I've never paid $10,000 for NFT, but like 2 ETH, yeah, fuck it, here you go, boom. Right. So people they go into the ETH, and now that's experiencing kind of a bear market. So I went to Lisbon, the Breakpoint thing, Solana, and one of the, there's this trend that you're starting to hear about, fractionalization of NFTs, using NFTs as collateral. And my personal theory is that if we get NFTs as collateral, that's the blow off top end of this bull market, because that's basically a way to lever NFTs, which are like the most speculative, most illiquid part of this entire market. And that's just a way to add a false sense of liquidity to them. And that,
Yeah, no, I mean, it's actually an interesting theory. I mean, I think too, to kind of go off what you're saying there, the idea of leveraging your NFTs. Also, just in general, everyone having access to all these DeFi lending platforms as well are probably going to further contribute to it, because if you want a loan, it's not that hard to get one now. You don't actually have to go to a bank to get one, right? You just go to go find some exchange, and as long as you provide the collateral, you'll get a loan. I do think, you're probably right. I mean, a lot of times it's all this leverage that ends up wiping people out. Fortunately, so far this cycle, we've been able to recover from a lot of this stuff. But yeah, eventually, well, we're going to be too far gone. And with regards to NFTs, a lot of people have been throwing their ETH into NFTs over the last couple of months. I'm not as in tune with the NFT market as I probably should be. But I do think, I'm pretty sure that a lot of NFTs, not all of them, but I think a lot of them were actually bleeding against Ethereum over the last month or two. And so you have these people that sort of put all this money into NFTs, and they just said, all right, I'm just going to throw a few ETH into it, right? Who cares? Just a few ETH, and it becomes it's not a tangible thing for people, right? Like they don't think about it in terms of real money. They just think about it as something they maybe bought at $100, and now they have a lot of them, and now they can just sort of throw them around like it doesn't really mean anything. But then whenever, when you do that, now you have the opportunity cost of the NFTs bleeding against Ethereum, And so now they can't even get their original ETH back for a lot of these NFTs. So it's sort of like a lot of these NFTs, are probably going to be looked at in the future as not that dissimilar from ICOs in some sense. I do think there are a lot of great NFT projects. I think the NFT space is great, but you have they're everywhere, right? You have so many different projects coming out every single day that there's only so much money that can spend millions and millions of dollars on all these different NFTs. There will be some, I'm sure, that'll stand the test of time, right? I think there will be for sure. But who are we kidding? Like in 20 years, a lot of these NFTs that you see coming out today, no one's going to know what they are.
When it comes to crypto, security and custody is paramount. Introducing this episode's sponsor, Ledger, your secure gateway to buy, exchange, and grow your crypto assets. I know I've got a smart audience, so I'm assuming / hoping that most of you already have your Ledger hardware wallet, but just in case you don't, this is how I think about it. I wouldn't get into a car if I couldn't wear a seatbelt, and I don't operate in crypto unless I can do it from my Ledger hardware wallet. Crypto is really exciting, but it is still the Wild West. There are lots of risks, and Ledger is the easiest way to make sure that you are still protected. And the best part about Ledger is that you don't need to make any trade-offs between security of your funds and utility of your assets, because Ledger has Ledger Live, which is a software. It syncs right up to your Ledger hardware wallet, and you can do anything that you'd want to do with your crypto assets. You can easily send and receive, you can buy and exchange, and you can get access to staking. And they've actually started to aggregate some of the best DeFi apps and services out there. Two of my favorites, Paraswap, a decentralized aggregator, and they've got Lido for staking. And stay tuned, I'm going to keep you guys updated. They've got some really cool services coming out soon. Aave, Compound, and 1inch among them. So if you take one thing away from this, guys, please make sure that you're protected in this space. Get yourself a Ledger hardware wallet today and start using the Ledger Live app. Click the link at the bottom of this episode. Thank me later. All around the world, tech companies are innovating and driving returns for investors. OurCrowd takes a global bird's eye view of private markets and brings the companies with the greatest growth potential to you to invest in. One of my favorite quotes from Jim Bianco is when he says, "I hate it when people tell me to invest like Warren Buffett. I wish I could invest like that guy. He sees all the best deals." Well, OurCrowd is addressing exactly that issue by bringing private companies to you when you can take advantage of them, i.e. when they're still early. OurCrowd's accredited investors have already invested over $1 billion in growing tech companies, and many have benefited from the 46 IPOs or otherwise sale exits that they've experienced on the platform. Join the fastest growing venture capital investment community at ourcrowd.com/OTM. Again, that is ourcrowd.com/OTM. If you take one thing away from this, be it that you should include OTM when you join OurCrowd. We'll see you soon. One thing I do want to get your opinion on is this idea of the flippening, the ETH and Bitcoin flippening. I know that that's a subject that gets like a lot of attention, right? You got the Bitcoin people being like, absolutely not, never. And the ETH people are like, it's inevitable. But I'd be curious to get your opinion. A, do you see that there's a good chance of this happening? B, do you think it's impactful in one way or another if it happens or not?
Yeah, it's kind of an interesting question. I mean, it's definitely an interesting question because nothing's ever flipped Bitcoin, you know? And so the idea that something's going to flip it, people just sort of, I feel like your natural reaction is just kind of roll your eyes, like, oh, not another one of these guys, you know? But you can't discount the fact that if you go back to the summer of 2017, Ethereum came within a few percent of flipping it, right? I mean,
yeah,
you know, a lot of people that maybe weren't around for the last cycle, they might think that the flippening refers to early 2018 when Ethereum went to $1,400 and Bitcoin was maybe trading for like 14K, 17K on the dead cat bounce. But actually, that's not it. Like, you know, the Ether Bitcoin valuation went to 0.15 in the summer of 2017, and that was before the blow off top, right? Mm-hmm. So there is some validity to say that it could theoretically happen. I mean, if something comes to within a few percent of actually happening, you have to treat it like it's a possibility. Otherwise, I'd say it's somewhat irresponsible to say that it can't happen. I think that the way that it could happen depends on how long the cycle extends, right? If Bitcoin goes on a parabolic rally, I mean, believe me, I'm fully in tune with market cycle theories, and people have been calling for market cycle peaks in September, October, November. Now it's December, right? Now a lot of people are calling it for December. If the market cycle peak is in December, then I don't think Ethereum can flip Bitcoin this market cycle. We just don't have enough time, right? I don't think we're going to have enough time to. But look, if the cycle continues on, and let's say it extends out until, you know, later in 2022 or 2023, if we're lucky, right? Then it seems like it could happen. If you go look at the Ether Bitcoin ratio, the valuation, we're in an uptrend, right? We've been trending up for the last 2 years. So if you just simply dubiously extrapolate from the uptrend that we've been in and just say, look, I mean, if we continue this uptrend that's stood the test of time for the last 2 years, if it goes on for another 12 or 18 months and we get another, you know, what I call them Ethereum tsunamis, it's basically after Bitcoin moves, Ethereum goes up, you know, like crazy. I mean, it goes up 2x in 2 weeks historically, right? 2018 was 700 to 1400 in 2 weeks. 2021 in April or in May, it was 2200 to 4400 in approximately 2 weeks. So yeah, like, I mean, if something like that happens, then I think it could flip Bitcoin. But I don't think it, even if it did flip Bitcoin this cycle, it is a possibility, right? It is a possibility. I don't think it would sustain it during a bear market. Like, I think that, you know, it could become like a battle then, like between like which one is number one. I do think it would have some interesting ramifications on the space because, you know, I think a lot of ways you get institutions to buy into Bitcoin is you say, oh, it's the biggest network. It's number one, right? It's been around for 10 years and it's still number one. How do you convince the same institutions if it's not number one, right? Like if it's number two, or if it ends up being number three or number four, right? Like it would completely change the space, right? I think it would completely change the space. And then you really have to argue, well, like, I mean, it'd be like, what if silver flipped gold? You know, like it'd just be something that you couldn't really imagine happening. So if it did happen, it would be really, really, really crazy. I mean, with that said, it's certainly easy to look at the Ethereum Bitcoin valuation right now and say, well, if Ethereum were to go up, you know, like 2x from its current price, and Bitcoin were to basically just stay humdrum at 58K, then we basically be looking at the flipping, right? I mean, it's
Right.
hard. It's hard to see Ethereum go up 2x without Bitcoin doing something as well.
I agree. Yeah.
And then also, as we discussed earlier, when Bitcoin goes parabolic, it usually leaves everything else behind. So then not only do you have to, whenever Bitcoin does go parabolic, there's a good chance that Ethereum's going to have to play catch up just to get to where it was before Bitcoin went parabolic, and then it has to, then it has to go beyond that. I would say it's possible, but I think the only way it happens is if the cycle continues to lengthen for many, many months to come.
Yeah. What do you think just past this cycle? Because I would actually argue that it's almost like inevitable that ETH has to do it eventually, because just the pure market size that it's going for is so much larger than Bitcoin that I feel like ETH either has to fail kind of as a project or it has to flip in Bitcoin. Because, if you just want to look at overall, like there is an existing demand for store value that's occupied by gold. And that's like maybe like a $9 trillion market. Let's just say it's a $10 trillion market overall. Well, the market cap for like global equities is like $110 trillion, right? So you can kind of, and that's not to, real estate's like 300 trillion or something like that globally. I don't know what, it's kind of imperfect analogies here, but I kind of view ETH as being some mix of like equities and real estate in some weird way. But the market that it's going for is so much larger. So I kind of view it as inevitable that it eventually happens because people want stuff that feels productive, has a bigger market size. If you talk to some of these TradFi guys, they're already saying, oh yeah, ETH is like FANG.
Right, yeah.
Have you heard that narrative?
Yeah, I have. I mean, if you had to ask me right now, like, will Ethereum ever flip Bitcoin in the next 20 years or the next 10 years? I'd probably say yes. Like, I would not take the other side of that bet and say that it can't do it, it's kind of like betting on, it's sort of like betting on like a tech stock or something, like really early on. Or I sometimes think of them as like completely different assets, right? Like Bitcoin is this asset over here, and it's like really sound money, as Michael Saylor would describe, like it's digital property. And I expect Bitcoin to just slowly trend up with time, right? And it's a different investment than Ethereum, but Ethereum has all these regulation risks. So that's probably one of the biggest. Probably one of the biggest milestones for Ethereum. I mean, you're talking about, well, if it's not going to flip Bitcoin, it's probably because it means that it failed, right? Like if it fails, then okay, yeah, like it's not going to flip Bitcoin. I would say probably the biggest hurdle for Ethereum is regulation risk. Like if we can get past, for sure. I mean, like if we can get past it, because I mean, even me is like right now, like I run stake pools and whatnot. And I'm always wondering, like, are they going to make it so that, like I have to KYC anyone staking with my stake pools? Like these things that, seem somewhat, mundane to maybe the average retail investor. There are a lot of people that have to constantly worry about what are these regulations going to be. And if you force literally every decentralized exchange to do all these things, it's just going to make things a lot more complicated, I think. And it's going to stifle growth for sure. And I mean, we already talked about that with or we were already almost looking at that earlier this year with some of those bills and whatnot that they had they were going through the House, and just thinking like, all right, well, if this language is left like this, then how is the space going to keep growing, at least within the United States, without people constantly having to worry about these regulations and if they're following them and if they're not. And I mean, that's one of the biggest things I'm concerned with. Not immediately, but as I said before, I do think that regulation risk is going to be one of the biggest sources of FUD in the next bear market.
I do agree that regulation FUD is going to be, it might give us one more big buying opportunity. Let me present a counter argument and say why actually the biggest regulatory risk is on Bitcoin, even though it's not. A lot of people don't think that right now.
Sure.
You've kind of heard over a long period of time, people are always worried that Bitcoin is going to get banned specifically. I don't know what your macro view is or how much you follow broader markets in general, but what we've got going on in terms of money printing and stuff, I think that interest rates, they can't afford to jack up interest rates because of the amount of debt that we have. You've got bonds, yields are already kind of historically low, but they can't really let yields rise too much because then the debt service costs would kind of bankrupt not only the US, but like a whole bunch of different countries. So you kind of got to punish bondholders. And basically the only outlet that you have is the US dollar in general.
Right.
If you go back to, like the 1930s, there was Executive Order 6102 or whatever. They seized gold. It was different back then. There was a peg. I think gold was reserved to dollar at like 40% or something like that. But basically, people were losing faith in the dollar. The U.S. wanted to demonetize to ease the effects of the Depression, stuff like that. So they basically just made gold illegal because it was an escape valve. And they basically punished the population. There was a really interesting signpost that I don't think got enough attention, which was Michael Saylor. He used to get out and say, the dollar is going to be worthless. Your cost of cash is debasing at 25% a year, yada, yada. But he switched it about a month ago. And what now he says is actually Bitcoin will be successful and the dollar will be at the same time. You want to put your little, tinfoil hat on, talk about conspiracies. Why did he switch that? That was like a huge pivot in his thinking. And I've always kind of wondered, it's like, dude, he's conducting a speculative attack on the US dollar. That's like one way to look at what he's doing. Maybe he got a little tap on the shoulder.
It's possible. He's certainly biased, for sure. I haven't actually noticed. That'll be interesting. I'll go see what he said about that, because I know,
check it out.
I had him on my channel, and he spent the entire time. With the initial narrative around it dropping. Honestly, I don't think that this is sort of like a weird. It's certainly not a popular opinion, and I don't know if you share it, but I don't think that the U.S. dollar is going to fail.
I don't either.
If it did fail, I think that would we're going to have a lot of other issues besides just crypto. It's just going to be a big worldwide issue if the dollar fails, and I don't want that. I don't want that to happen at all. I don't want that to happen. Nor do I think it will happen. In fact, actually, the dollar this year, it's actually been doing relatively well. If you go look at the DXY, right? If you look at that and its valuation against a weighted basket of other not other cryptos, but other currencies, the dollar's actually been doing relatively well over the last several weeks, and it's been breaking out to the upside. So yeah, I don't know what happened there, why he changed his tune on that, but that's an interesting observation for sure.
Yeah. If you think about the dollar in general, right? You almost have, there's the IP of having the dollar, right? The intellectual property, and then there's the way it gets distributed throughout the world. I think there's a really likely scenario where the current system stays in place, where the US is the IP holder of the dollar, but it just gets a tech upgrade in the form of stablecoins, basically.
Yeah, I would love for us to. I think we need to transition to something more digital than what we currently have. For sure. I still sort of don't understand why we carry cash around, and especially pennies. I feel like penny, what's the point? I think it's coming, right? It's only a matter of time before all this stuff is going to come, and it's interesting, how many advances we've made in other fields, and we're still using cash money for a lot of purchases.
Yeah, I think it's wild. I know we're drawing close on our time here, but I want to get your opinion on a couple of alts. And I really do like this idea that you have, which is, you don't want your alts to bleed against Bitcoin, especially. And I saw you comparing it to Ethereum as well. Right. And I've always heard that you see people denominate their profile in this, and I actually, now listening to you talk, I really get why Bitcoin and ETH are the denominator, or sort of the baseline performance level that you'd want. I've seen you put together a couple videos on Avalanche. I've seen you talk about Cardano. Whenever there's a big sell-off, it does seem like there's one alt that seems steadily kind of chug up or outperform for no reason. Recently it was Luna over Thanksgiving that seems to have done well for, I have no idea why. Any particular, without maybe showing any product, but how do you kind of pick out different alts to chart? What's your framework for kind of looking at different things that might be interesting to you?
I think obviously layer ones are pretty big. And even then, I think that certainly focusing on ones that are that are going to become roll-up centric are great as well. And that's one of the reasons why I think Ethereum is so far ahead of a lot of its, quote unquote competitors. So I think, that makes Ethereum the blue chip, right? In terms of other altcoins, if it's a layer one, and especially if it's in the top 50, it's probably going to have these phases where it does relatively well. And I think part of the reason you see some of these different projects go up is, as I mentioned earlier, you just have this money ball that floats from one project to another. And a lot of times they're chasing DeFi incentives, right? Avalanche had I don't remember exactly what it was, but a couple $100 million DeFi incentive to go use Avalanche's DeFi ecosystem. So you have people sort of hopping around from one project to another. It happened on Solana not that long ago, right? I mean, Solana went crazy, then Avalanche went crazy. Now you said Luna's doing pretty well. I think it's just going to keep happening, right? I think people are going to keep speculating, and I think part of it too is, when I look at projects, again, it's an optimization problem, right? And I've talked about this before. The blockchain trilemma of you have to optimize security, scalability, and decentralization. And some projects will have claimed to completely solved it. They haven't, right? They're definitely pulling the wool over your eyes somewhere if they claim that. So what I look for is I really value decentralization, but not everyone does, and that's an important distinction. Is look, there are more centralized projects out there. That doesn't mean they can't give you a good ROI, right? I mean, like, think about everything in our world that exists today that's centralized, right? I mean, like, everything is.
I agree.
But that doesn't mean you can't make money on them. So you can certainly make money on centralized projects. So I think you kind of have to look at, like, what do you think the market's going to value as well? Not just what I value. What do I think the market's going to value? And so, like, I have positions in a lot of the layer ones, right? A lot of them. Most of them, in fact. I mean, if they're in the top 25 and they're layer one, there's a good chance I have a position in them. Basically, just because, look, I mean, I don't know ultimately what the market is ultimately going to value. Clearly, there are some people that like centralization. Look at what the Binance Smart Chain, look what BNB's done. It's in the top 5, even though the Binance Smart Chain is extremely centralized. And as I've said before, the Binance Smart Chain just started off as a clone of Go Ethereum. It's not like it's that complicated technology. They just raised the gas limits, basically, and they changed some other things to make so the gas fees are a lot lower. But at the same time, it's extremely centralized. And I know some people are having trouble keeping the nodes synced. So you have to wonder, like, well, what are there's certainly risks on each one. So, like, I look at decentralization. I mean, that's why, I love Ethereum. Cardano is relatively decentralized as well. The problem with Cardano is they don't even have useful smart contracts out right now. So we're all growing old waiting for it, right? I mean, it's no, and I've said that. I mean, I was talking about Cardano on my channel at 2 cents. But I'm not going to sit up here and say, like, it doesn't have any issues. They do, and I think ultimately, and I've finally seen them start talking about more than they used to, transitioning to becoming roll-up centric as well, like Ethereum, which makes me happy. Avalanche, another good one. I also look at who's running it, right? Like, and I think that's like the number one thing for me. Is the person. Like, I like to bet on people. It's like, like, if you bet on Elon Musk for the last decade, you're doing relatively well, right? Like, if you just invested in anything Elon Musk was working on, you'd be doing relatively well. It's sort of like saying, like, with Ethereum, like, you're sort of betting on, obviously there's Vitalik, but you're betting on all those developers and whatnot to sort of come through. With Polkadot, you have Gavin Wood, who, he came from the original Ethereum team. Obviously, with Cardano, you have Charles Hoskinson. With Avalanche, you have Amin. He's like he's a pretty famous professor. Okay, a lot of these layer ones, you have to have really a successful person at the head and a motivated person, and that's a lot of times what it comes down to. Like, I want to bet on someone that I think is going to run the race, and I don't mind my investments sort of growing, riding their coattails, Yeah. So that's what I look for, right? So I look for the right person and the right idea. But you can have the right idea that never makes them. There's been plenty of examples in history where the better idea ultimately lost out because they just had bad marketing or not the right person leading it.
Totally agree. And honestly, you could look at Lightning as a pretty interesting example, right? There are some folks in Bitcoin that are like really interested in Lightning. It's hard to say if that was like a huge success or a failure in general. It's like that was a really good scaling solution that got put on top of Bitcoin, but it's kind of like 3 years too late. Right. And in the end, you had so many things crop up in the meantime that it kind of stole market share in general. So I feel like speed actually is pretty critical. And just, one last theory to run by you here, and then I'm sorry, I'll let you go. I'm keeping you on here long. The way I think about this is the amount of value that I think is going to flow onto blockchains is gigantic. I don't want to make I sound like one of these people that I thought was a lunatic 4 years ago, but I think there's a decent chance that crypto flippens the stock market in 10 years. I think it's going to be huge. So when you look at that, I actually don't really love the idea of all that value resting on one underlying chain. I actually kind of do like the idea of having multiple different chains just as almost like some amount of diversification if there was ever a critical error or something like that. Mm-hmm. And what I would also point to is like, I think a lot of what crypto is digital property rights in general. So I think the observation that the market will value decentralization when it comes to, because the amount of decentralized something is, the more secure your property rights are in general. So that's almost like kind of like the United States, right? We have very strong property rights that get upheld by courts and stuff like that. You rather own an asset in the United States than really anywhere else. But guess what? China's a gigantic country too. You've seen by Ant Financial and what's going on with Jack Ma that your property rights aren't that secure over there. But guess what? People still invest in China. They just attach a discount rate to it, right? So like, I do think there's room for different, sets of values, ideologies, etc. And maybe the market will value decentralization more so than anything else. But, I don't know. I really don't like this emerging value where it's like, this is moral, everything else is immoral. It's not going to work because this is the best. It's almost like you're like, hey, the U.S. has the best form of government, democracy is the best form of government, and nothing else is going to exist. It's like, take a look around you, dude. I'm American. First of all, I was grown up. My parents told me the U.S. is the best country in the world. That's a whole thing for another time anyway. But like, I believe that. I love America. But I think that's crazy. That would be really arrogant of me to say this is the best and nothing else should exist because this is the best. You know what I mean? I don't know. I feel like that's the level of discourse that we're currently at with it. And I'm curious to get your thoughts.
I mean, I agree. I think that we're going to have a multi-chain world. Like, I don't think we're going to have just like a single chain that's going to rule them all. I think there's going to be, there's going to be a lot of chains that sort of fill their own niche, right? And it's probably because too, like, some people are going to prefer one chain over another. There's not necessarily a correct answer, I mean, there's a lot of different car companies because there's not one correct car,
Right.
Like, I think that they're not all going to survive. Certainly, like a lot of them will probably eventually die out, but there's certainly a lot that will survive. And it's also possible too that in 10 years, the top 10 could have 5 or 7 cryptocurrencies in it that don't even exist today, for all we know. Because every cycle, right? You go back 2 or 3 years from any given year, and you'll always find coins that aren't in the top 10 anymore. So I think we have to consider that as well, because every cycle there's like these new ideas and how we can optimize things, and you're going to have all these new teams. It's sort of like, it's basically capitalism, right? It's people are finding you look at the space, you say, all right, well, I think I can do it better than these guys, so I'm going to create a project. And now these projects, they all of a sudden they basically immediately start off with much higher market capitalizations because people recognize the space is legitimate. But I would agree with you. I don't think there's going to be just a single chain to sort of rule everything. I think there's going to be a lot of different chains. But with that said, there still were some car companies that died out, right? Like, it's not like every one of them survived. So there's going to be some of these layer ones, I think, that will die out. It's just a matter of, I think the safest thing is, like, have your blue chips, Bitcoin and Ethereum, for sure. I think everyone should have that at the very least. And then, pick out a few other ones, right? And you can speculate on them. And hopefully they're the ones that stand the test of time and ultimately win out. But right now, it is somewhat a guessing game. As sure as we are about any project, whatever altcoin anyone's married to, you really don't know what's going to happen in 5 or 10 years. We really have no idea. So I think it's good to have a lot of different projects in your portfolio, but not too many, right? You don't want to be over diversified. And we'll hopefully have a multi-chain world as different chains sort of fill different, niches.
Yeah, absolutely, man. You've been super generous with your time, Ben. It's been a really interesting conversation. If folks want to find out more about you, what you're doing at Into the Cryptoverse, your channel, what's the best way to follow you, find out more, whatever?
Yeah, so my YouTube channel, and then I have Benjamin Cowen. You can just search it in YouTube, and then I also do have a Twitter. Into Cryptoverse is my Twitter handle. So those are probably the best ways to find me.
Awesome. Well, Ben, thanks so much for your time, man. This has been a ton of fun, and I'll have to do it again soon.
All right, appreciate it.
Take care.
Bye.